Hello traders, and thanks for tuning in to this week's Market Outlook from XNES. I'm Michael Stark, Financial Content Leader at XNES, and in this video I'm going to be giving an idea for trading American light oil. Where might the price move? What's the potential target? What are some of the most important narratives driving the potential movement? And what would traders who were to take the position need to be aware of in terms of news and data this week? But before that, let's look back at the performance of last week's idea. Last week, the idea was a potential buy for euro-dollar with a possible target around 107.8. So far, that idea has been accurate, but whether it might continue and reach the stretch target or retrace depends very much on the second round of the French legislative election. So we'll be monitoring the performance of the idea over the next few days and into next week. Now, this week's idea is a potential buy for American light oil. The possible target for the position could be around $85 and possibly even higher than that, around $86 as a stretch target. We can see that recently oil has moved in a fairly strong uptrend after quite a strong downward movement at the very end of May and beginning of June. However, the main concern now is that the price is very clearly overbought. So it's possible that if the movement were to continue upward, might not do so immediately. One of the main narratives driving the possible move upward by oil is Hurricane Beryl, which has now been upgraded to a Category 3 storm and is likely to affect refining operations in the Gulf of Mexico, primarily in Mexico itself, but possibly also in the Gulf states of the USA. Meanwhile, general economic conditions in major advanced economies generally seem to be significantly better, or at least significantly less bad, than had been predicted earlier in the year. Particularly this week, we've seen that Chinese manufacturing PMI indicated growth and was fairly significantly higher than expected. The crucial releases for all markets this week are the NFP and American unemployment on Friday. That's strongly going to affect pretty much every instrument. But also for crude oil specifically, traders are likely to be looking at the regular stock data from the API in EIA, and on Friday, Baker Hughes' rig count. In summary, the idea for potential trade this week is a buy for crude oil with a target around $85. Primary narratives driving the possible move up are overall more positive economic conditions and the storm in the Gulf of Mexico possibly affecting refining. And the critical releases this week are, in general, the NFP, the US job report, and specifically for oil stocks and possibly rig count. Please remember that it's just an idea for a trade, it's not a signal, it's not a guarantee of success. You always need to manage risk and do your own research.